Well, Nick, I'll throw this one to you then, just to start. So I'm a regional owner operator. I want to acquire several performing Class A properties in markets that I am not currently involved in, but I can only provide up to 10% of equity. So how do you think I should round out my capital stack? And will joint venturing with someone help me out in that regard?
Yeah, I think that one of the things that is interesting in today's market is that um, while we're starting to see some stabilization, I do think that equity has been more interested in just shy of pre-stabilization. Like a lot of equity out there that we're seeing, institutional equity is chasing transactions that still have they have a good runway, but they're not fully stabilized yet because they want to be able to earn a higher rate of return. The equity kind of pouring into stabilized, compressed return assets. No one wants to be that competitive today, just not knowing where the capital markets are going to be. And I would say, with the exception of probably some of the REITs, not all, who have been a little bit more aggressive with putting out capital on more stabilized. Um, so um, that's just a little bit of like the equity market is probably a little bit more nuanced than I would have guessed if we weren't, in the markets right now. Um, I do think that being able to put 10% equity into a property is very doable, especially if you want to start looking for joint ventures. 90-10, 80-20, even 95-5 are kind of very typical structures that institutional capital would want to see if putting in place a joint venture. And as a regional owner operator, again, getting back to the story, right? Can I develop trust with you? Can I get bought into your vision? Do I, as an equity partner, feel like you're the one I want to hitch my wagon to in that region? Being able to bring 10% equity to a PE insurance, institutional capitals 90% could be a great way to acquire multiple assets in a market. So I think it's a little bit of a um, strategy of, would you want to try and high leverage a single deal, put all your eggs in that one basket, right? Or use your equity across on a programmatic relationship across multiple. Um, I think that does start to answer some of the questions around working capital.
Mhm.
Any lender looking to acquire an asset today is going to want to make sure that, um, from a interest rate perspective, whether it's a capped interest rate or a fixed interest rate, that any operating losses or working capital needs are going to be reserved for, and that the deal is well capitalized when that acquisition, takes place. I think that my my recommendation to you would be that, especially if you have an inside track towards a property, being able to, try and sell yourself as a great partner for institutional capital to come in and acquire this property or multiple properties, I think would be a great way to take them down in a joint venture structure. Um, and then it really just comes down to pricing. Where's the market right now? What asset or what rate do you cap rate and or equity or I'm sorry, valuation do you think these assets are going to be given the market that you're in?
That was,
Yeah, I think
sorry, Nick.
I just was gonna say, like, Nick, I completely agree with you. I think if you have an inside track, maybe it makes sense, and you could do like a 95-5 JV with an institutional partner. I just would caution that this part of the market, that you know Class A, more or less stabilized asset is probably the most liquid end of the market today. You'll see 10 plus up to 15 potential, real buyers enter that market. And, there's REITs that don't need leverage. There's private equity firms that have leverage. There's even private equity firms that are investing out of, sort of lower cost core plus funds that can, kind of financially engineer deals. So it's a pretty sort of, like I said, liquid part of the market. And if you don't have to play in it, I don't know that it's, necessarily the best place to be. So.
Yeah, I think those are, I echo both y'all's comments, and I would tell you a couple things, and just reemphasize what Nick said. The most, what our transactional experience is current day is the most competitive segment of the marketplace is institutional Class A properties that have a little bit of room to go from an operational perspective. And what happens is there's a bidding environment, especially if these are brought to the market by intermediaries, where people look at the going in yield comparative to what the going out yield would be. And people are becoming more and more competitive, compressing that initial yield in order to get the opportunity for an outsized return on the back end, whether it's performance enhancement or occupancy improvement. And that's the most competitive part of the transactional marketplace that we have witnessed. Secondarily is the fully stabilized asset. Nick, I think you mentioned this as well, where you do have certain players. There are some, 1031. There are some visitors to the marketplace that are looking at the going in yield, but the room full of potential bidders is significantly less. Zach, to your point, if this is a competitive bid environment, in other words, it's brought to the market by a brokerage shop, the likelihood of you being able to establish that joint venture partnership based on the opportunity is pretty low. I think conversations with your would-be partners prior to finding the opportunity or prior to those opportunities coming to marketplace is essential. And what would be even better is if you found the opportunity and were able to control that opportunity without a bidding environment. And now you've got more power as it relates to the negotiation of the joint venture because you're holding on to something that your partner wants to invest in. So without question, the most advantageous place with a 5 or a 10% equity stack is to control the acquisition opportunity.
And another thought is if we look at the public REITs press releases over the last couple quarters, we've seen that they have focused not just on deploying direct equity, but they've also been strong lenders to the senior sector. And a lot of that has come in the form of high leverage loans, either in the form of development or for near stabilization. And a lot of those are in the 80 to 90% range. Now, those come with strings attached because they're going to want to buy the property, right? They're loaning so that they can own it in the future. But that could be an opportunity if this is an inside track. It's not quite stabilized. You could approach a REIT to provide high leverage finance, and then the ability to implement your special sauce as a regional operator, create more value, and then have them acquire that for you and have that embedded purchase option in there. So that could also, again, depending on your strategy as an owner operator, that could also be a way to take this down with just one financial partner. But it's a shorter term sort of, improve and then sell proper transaction or structure.
Yep. And I would just add that is absolutely a possibility in this marketplace. But if that is a potential scenario that you want to explore, it's very important that you look at the exit scenarios by which the REIT will control the opportunity, whether it's a repayment of the debt or the option to purchase. And that option to purchase is either going to be formulaic or it's going to have an exact number. You need to look at that in terms of your own investment scenario and what the return on capital looks like, because more often than not, the public REIT will exercise that option when they have the opportunity to.
Yeah, Nick and Matt, it is interesting to see, some of the REITs come in, play and, sort of the debt markets, and they'll even partner with bank partners and provide a solution. It looks a lot like a debt fund AB structure, or they'll do, a mezzanine financing option with, owner operator. So I don't know if that's going to continue as, you know, sort of opportunities present themselves to, you know, deploy equity, but it's definitely interesting part of the market.
Mhm.
I could have a lot more follow-up questions with this one, but I do want to get to a few more of our scenarios. But thank you guys on this one.